Good afternoon, everyone, and welcome. In today's presentation, I will be talking about the power of price action for both stocks and futures. Of course, it's available for other asset classes as well. For those of you that do not know me, my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade the futures and the equities markets. I have been trading for more than 18 years. I'm specialized in day trading futures and swing trading futures in stocks and also active investing in the stock market. Before becoming a professional independent trader, I come with 10 plus years in investment banking. And I have also mentored traders from the beginner stage to financial advisor to hedge funds and traders worldwide on stocks, futures, and forex, and even in cryptocurrencies. I work with the firm for consulting on the technical side. I'm also a trader, a presenter, a speaker, and educator, and an author. I specialize in high velocity moves. So what that means is that I'm looking for the best buck for my investment. I'm the designer of an institutional proprietary trading system that is actually very simple. I cannot take credit for it because I have tailored this system for my trading accounts when I first started trading on the retail side. The system is based on price support resistance, and there are 8 layers of price support resistance that are present on technical charts. And I'm looking for confluence areas because once you have confluence areas on your technicals and on your side on your charts, then trading becomes a lot more powerful because that confirms the price is going to go in your desired direction based on your daily bias. I also use specific trigger times for the New York trading session because I trade only the first 2 hours, but the trigger times are designed to be used for the whole entire New York trading session. There are also corresponding triggers that are applicable for the London session that we teach in our courses. I specialize in specific price zones because there are 4 specific price zones, whether you're trading stocks or futures or forex, that are designed for institutional scale in or scale out. And that reinforces the directional bias in the targets, and they're very easy to use. And I also use chart synchronicity and divergency. A perfect example, I'm going to show you some futures charts from today, because today we obviously every single day I trade futures from 9 o'clock to about 12 o'clock. And actually a lot less than that because the market opens at 9:30. I rarely put on the trade on before the market opens, and I have the trade closed by 12 o'clock. It has not always been like this. I have been a full-time trader for a very long time, for more than 15 years, but as of late, I'm only focused on the first 2 hours in the futures for tax purposes and also for simplicity. And chart synchronicity and divergency is very important because not all indices are created equal. And one of the reasons why you're seeing sometimes more buying pressure or more selling pressure in one of the indices is because of the underlying stocks that form the sectors that are within each index. For those of you that want to find out more about Trade Out Loud, you can hop onto our website. It is TradeOutLoud.com, or you can visit our social media pages, which is Facebook, Twitter, YouTube, and LinkedIn. And in fact, on Twitter, because it is real time, we do have a pretty good following on Twitter, over 10,400 individuals that are following us. We do post a lot of trading ideas there before they happen. The reason why I love trading is because this is the skill that you can definitely work from home. It is an income producing style of trading, day trading, and this is something that I specialize in. Like I said, I only trade about a couple hours every single day, and that's my main income style of trading. It means that you're in and out within the same day. And I also have a wealth generating system, a wealth generating style of trading, and I swing trade and actively invest. I also do this for the futures market and very heavy aggressive to the stock market. So I trade for a living and I trade with the institutional money flow. I do not follow institutions, so because we know where their levels of interest are. We know where their high velocity areas are. And once these levels are tested into the session, into a certain period throughout the day. And of course, if you corroborate that with the timing in the market, the trigger time, the reversal times that are happening in the market, that is the pure recipe for a high velocity move that will generate a lot more for your risk, for your allocated risk. So you're looking for 2 to 3, 4, possibly R's. That means risk to reward ratio for the risk applied. I focus on these high velocity moves for high rewards. And that's the only reason why I trade the New York trading session, because you have a really nice blend of volume. You have market participation until 11:30 from the London session, plus you have the overlap of the New York trading session that kicks in at 9:30. So we day trade every single day from 9:30 to about 11:30 a.m. Eastern. Basically, it's about 2 hours and done. We swing trade about 10 minutes a day. So that's it. I do all the work on weekends for swing trading. So I scan through almost 6,000 stocks every single weekend. It is a thing that I love doing, although it is a lot of time consuming, but it takes me about 8 to 9 hours to go through each and every stock and try to determine the bias for the week, the best possible trades for the week, and these are the stock trades. So on Sunday night, I compile my list. I have my stocks, my entries, my stops, my targets. So all the homework is done. All the preparation is done. And then on Monday, I put in my orders and I get up very early on Monday because in a lot of times I like to take the trades right at the trigger. And if we have, for example, a very bullish environment, I like to buy at pre-market. I deploy precise strategies at specific times and locations because they're correlated with my 8 layers of price support resistance. They're correlated with my trigger times in the market and with volume participation. I also apply a very simplified management. So what that means is that because I do have pre-established targets, so all my work is done before the market even opens. So for my swing trading, my homework is done on Sunday night. It's finalized on Sunday night. So throughout the week, I only dedicate 10 minutes or maybe even less than 10 minutes just to raise the stops or trade, obviously to trail some of the trades, to collect some profits. I already have orders in place. So it's a system that is on autopilot. We have been doing this for a very long time, and we have members that have been with us for more than 11 years. And that is when the swing trading program actually started. So I was saying about the simplified management. We do have a precise system in place, and we know exactly what we need to do when we achieve target 1, what we need to do with the stop, when we achieve target 2, what we need to do, and how we need to raise the stop. So it's a very simplistic management system. You need to have that in place, and everything needs to be simplified to the maximum for you to be a successful trader. If you overcomplicate your trading, your results are going to suffer. And of course, the reason why I trade is because it has an unlimited income potential. And the more difficult the market becomes, the more keener you are to finding those precise gems in the market and finding those jewels that are going to shine. There are always going to be unique trades. For example, in the market right now, for those of you that are swing traders, you could see that the Dow stocks are literally thriving in a turmoil environment in the tech stocks. So you're seeing stocks like Costco and Walmart that are Dow components that are soaring higher. You have UNH that has created a new all-time high today. You have Home Depot with a new all-time high today. You have a lot of financials within the Dow, for example, like JP Morgan, you have Citi, you have Bank of America, and you have new highs into today's as well. You have IBM again. This is a Dow component that is very strong. You also have 3M and Caterpillar that are soaring higher. So the reason why I'm telling you this is because This not only helps me from the swing side, because I know that I need to focus more on the Dow components for swing trades because of the relative strength, but this shows me that on a day trading level, I need to focus more on the Dow, because the Dow will have a lot of propulsion to the upside because it's fueled actually by these components, the Dow components. So trading is the reason why I love trading is because it is a recession, depression, pandemic proof skill. The reason why I love trading so much, like I said, is because first of all, you can work from home and actually you can accumulate above average gains whenever you are seeing a pandemic, a recession, or anything that's happening in the market. I started helping a lot of individuals back in 2007, 2008, and 2009, when most of my friends and acquaintances that knew that I trade for a living had their accounts under pressure, and actually they were pulling their money out of the market. When you're having a depression or a pandemic, the worst thing that you could do is pull the money out of the market, because the market, you have to wait for some really good sign of reversing. And before that, it's just like jumping in the pool. That is the pullback. So you just literally hold your nose and you dive into the pool. And then at one point or another, you're going to return back to the surface to grasp some air. And this is exactly what trading is within these environments. I have helped tons of individuals get back into trading and not give up on their portfolio, not pull their money back. And I've helped individuals for about 3 to 4 years before we actually founded TradeOutLoud. This is a chart from today, and this is a day trading scenario, day trading level. So as you can see, we have some technical levels that are on the charts. These lines, these obviously horizontal lines that you see here on the charts, these are institutional levels, and these are trigger points. So that means that if the price is going to start snapping above this high velocity area, it's going to start dynamic for the upside. So therefore, shorting is not an option. So this keeps you on the safe side of the trade. Then again, for today, we had a moderate bullish above level that you could see that it triggered immediately off of the New York trading session open, and it went exactly into target, and then it fell apart and it retested very close to the support area that we have. Again, these are institutional levels where institutional traders like to leg in to the trades, scale into the trades, and also we have levels where we scale out of trades. And again, the big push, the bullish above level, is above this level right here, the 220 level. And you can see how it advanced. We had a target into 350, and we still have targets for overhead as well. Now, this is the Dow. The Dow is the superstar of the day because it came with better structural image. Technicals were a lot more robust than they were in RTY. This is Russell. Than they were in the E-mini, S&P, and NASDAQ. NASDAQ is under pressure. Russell is under pressure. And in today's trading room, we had one member that was asking, okay, so is it safe to basically, you see this little, consolidation here, and typically you're going to, the first thing that comes in your mind, if you don't know multi-time firm analysis, you're going to go like, okay, this is going to be a short. This is exactly what they were banking on here. So institutions wanted to do a forced sell and then accumulate more to push the price back up. So this was nothing else than drag it down, stop out, clear the stops, and then buy. And this is because it was heavy support. It had a lot of heavy support from the weekly structure. So even though we're trading a 2-minute chart, 1-minute chart, 15-minute chart in the trading room, we do look and we get our analyticals from higher time frame to have that higher precision, because that's how all the algorithms are built, and that's how all the institutional traders, portfolio managers, hedge funds are trading. So you have to have that edge. The E-mini S&P as well, you could see that it has a bullish above area that it has tapped into yesterday actually, and it tapped into today. It also had a moderate bullish above. So whenever we see that we have a moderate bullish level, we always take the trade, for example, with half the risk. Why? Because the trade is more likely to have a 60 to 40% chance of working. So that means 60% chance of working, 40% chances of stopping out, or 50-50. Once you're getting above the bullish above level, then your odds are increasing and you're going towards 85%. So you could see why we have a really huge win ratio for all of our trades. My win ratio is over 87% on day trading. And the reason for that is because of the system that we implement. All right, so another trade that we discussed today is Cisco, and Cisco is a trade that I actually called today as a swing because it came in with a robust structural image. And it also had a really good pattern on the weekly chart. It had a nice pullback into the 10 EMA. It had a little bit of a clearing of the stops right here. And then it started to burst higher, rotating over last week's high. And this created the high velocity. So you need to know where to look, on what chart to look. Some traders in my trading room, because I mentioned it in the trading room as well, the room that I run is focused on futures, but because I swing trade as well, really aggressively. So I do have a large amount of swings that I do every single week. I did mention Cisco as well. And we did have a lot of members that took it as a day trade, and you could see the kind of velocity, the kind of move that we're looking for the upside. So you can see that once we're snapping above, we're above the critical level, the high velocity area. We don't have it on this chart, but it was on one of my other charts. Once we had it over the velocity area, which was into the 5150, it started to really go parabolic up. And this is what I mean, really good risk to reward ratio. It's all about risk to reward ratio. Before I dive deeper into the technicals and price action, I would like to tap a little bit about trading on trading psychology, because this is the theme of the event for today. And this is actually from the lens of a 20-year pro trader. So everything you want is actually on the other side of fear. And the fear is the only thing that is holding you back from your next perfect trade or from doubling or tripling your account. There's a huge psychological component, and these psychological components are very, sorry about that. These psychological components are very important to the development of the perfect system. So number one, trading, you may want to ask, what does psychology have to do with trading? Because I could have like a really great system. I could have like, I know how to do money management. What do I need psychology for? Well, if you psychology has to do a lot with trading, and why is it important, and why you need to have a really good mindset when you're trading. You might not believe it, but it is a huge, it has a huge amount to do with trading psychology. Your success as a trader has a lot to do with your trading psychology. So, if don't believe me, ask anyone who has been trading for a while, for 10 years, for 20 years, and even more than that. Trading is 90% psychological and only 10% method. And it is ridiculous to think that, a lot of traders just put a lot of focus into strategies, into everything else, and they're forgetting the psychological component, because it's your reaction towards loss. It's your reaction towards a win, so it's all about the emotional side. Your trading system should be a really well-greased machine where your mindset, meaning your psychology, has to be in sync with your money management. So that is how you manage your risk, because that's the most important aspect. And of course, your method, your strategy that you have learned, where to buy, where to sell. So that is your trading system. So your mindset and your ability to control it are the most important. Your mind drives everything you do in life, and trading is no exception. So one of the biggest components of this trading psychology is to have a plan. So to have a plan. So like with anything in life, right? Even when you go grocery shopping because you have a plan. You're running out of milk, you're running out of bread. So you need to have a plan. You need to hit the grocery store and get those things. So trading is the same. You need to have a trading plan, and you need to have a simple trading plan. Now, I know traders that start writing novels about a trading plan. No, a trading plan should be very simplistic and should be on your desk. If you have just started trading right now, if you have been trading or trading unsuccessfully for 1 year or 2 years or 3 months, you have to have it right in front of you. along with the position size chart. So these two things go hand in hand. So your trading plan has to have some really clean, clear components. Number one, where you entered the trade. That should be really important. Are you going to look for a pullback? That pullback should be where, whether you're trading with moving averages, should be, let's say, into a 20 simple moving average, or whether you want to pull back in an ongoing trend into a minor support level that will confirm to you that particular asset that you're trading is into an uptrend or a downtrend or whatever the case may be. So you need to define what kind of strategy you need to and what kind of setup you need to apply. The other thing in the trading plan is like, when are you trading? So you need to narrow down your trading, and also your trading universe. What are you going to trade? For example, I am really focused on indices. In the first 2 hours, they are my employees. They are working. I'm waiting for them to set up according to my trading plan, according to my parameters. And you see that I'm using my levels, right? So I'm using institutional levels. So I want the pullback to happen into my institutional level. And then I'm waiting for the price confirmation. We're going to talk about price action. The price action is the only non-lagging indicator. The reason why we do use some indicators and some levels is because these algos that actually represent 87% of the market volume trade with them. So you need to have a very simplistic plan. First of all, the setup, how you are going to manage your risk, right? Your risk plan. How much risk are you going to allocate for your trade? Because we're talking about futures. There is a big misconception out there, if you're a futures trader, that if you have a certain account size, for example, let's say a $10,000 account size, you're going to go like, okay, so I'm trading at one full size contract. Okay. That is wrong, because if you do that, you're not going to have the best possible outcome for your trade, because in some instances you may have tiny stops, and in some instances you may have very wide stops. So it's going to be very hard to recover from those really wide risk levels that you apply for certain trades. The best way to determine your risk is by evaluating the setup that the price is forming. The risk actually represents the difference between your entry and your stop, and you need to position size for that, whether you're futures trader or a forex trader or stock trader. That is the only way you can apply a controlled risk for your trade, because your risk needs to be the same on each and every single trade. And it's not that, for example, it's not the same thing, for example, if you're trading the mini S&P ES, and if you have, for example, a 5-point stop on one setup and you take it with one contract, how about if you take it with one contract, you have a 10-point stop, you're doubling your risk. So the risk should be the same on each and every single trade. And of course, management is very important, because management takes emotions out of trading. I never traded with emotions, and I was very fortunate because I do come from trading background. And then when I switched to retail trading, for me, it was really obvious, because I knew the rules. Trading is a rule-based system. You respect the rules. The market is going to be extremely generous. You're going to have money pouring into your account. You're going to pay so much taxes. It's going to be ridiculous. So if you don't have the plan, that's going to be really hard, because you need to have a management plan in place. Once you have this management plan in place, you know exactly what your reaction is going to be. If, for example, the trade is going to go into target 1 or the target 2, so you're going to know, are you going to lift your stop? How are you going to lift your stop? So you have to have a really simplified management system. The second thing that we're going to talk about is attitude, your attitude towards trading. If you're into trading for the wrong reason, saying, I hate trading, I don't care, I don't want to learn it, I just want to make money, I just want to follow someone that, is going to make me money. Sometimes you may get really lucky and you can follow someone, for example, like me, that makes money in the market month after month after month. I was telling my traders yesterday, that my only break even month was back in 2018. Other than that, I've never had a losing month, never, because I respect a plan, I respect guidelines, and we trade with institutional levels, so you can't go wrong. So your attitude is very important when it comes to trading. Will determine whether or not you're going to be profitable or not profitable. Because if you are fearful, if you have an, for example, if your attitude is more important than any of the characteristic attributes required for successful trading, right? You need to have success right in front of you, right? You need to think about success. You need to think about your step, your next step, your step further. Your attitude is more important than your market knowledge and even your degree of skill. It is important how you react to the market and not what the market does to you. Newsflash, you're also going to encounter stop losses, right? But it's the problem here is that if you have a losing trade, right, everybody does, it's not the issue. The real issue is how you react to your loss. Is it devastating? Well, if it's devastating, it means that, and I have encountered traders that came to me saying, oh my gosh, this trade is devastating. Well, what is your size? That is a very easy fix, because if we go back one slide and we talk about risk again, you're going to see that once you allocate a certain number of trades per day, trading becomes way easier, because when you allocate, for example, I allocate for every single day about 1 to 4 trades, right? So what I do is, for example, if I have, let's say, a risk per trade, let's say I have a small account of $10,000. And let's say I decide to use 1%, right? 1% is great, especially for futures trading. In stock trading, you can go as much as 2%. It's not as risky as futures. But if you're using 1%, that would be $100. So you take the $100, you multiply it, right, by 4, because you're going to take possibly 4 trades in a day. It's not mandatory to take 4 trades in a day, because if you have one big successful trade, why bother? The trade is done, right? Because in the afternoon trading session, once the doldrums are setting in, the futures environment tends to be a little bit more choppy than the stock market. So it's mostly likely that, you're going to encounter more stops in your trading. But if I have one great successful trade, for example, like I did yesterday in that really extremely choppy environment, I took like 70 points or something out of Dow and I was done, right? So that's the kind of trades that and then you have those 3 bullets that you can actually reserve for the next day. But you have to be very comfortable with the loss, right? Because losses are happening and they should not be devastating, because once you know that you have allocated, for example, 4 trades in a day, that's about $400, and you're going to risk $100 on each and every single trade. You know exactly that, yeah, you know what? I have allocated this much money for my trading in a day, and that's not going to be devastating. Okay. So when you encounter a loss, what are the emotional aspects of it? Think about when you're having a stop loss. I know it sucks, right? Because having a stop sucks, but it shouldn't be devastating, because that's just 1 bullet out of 4. Okay. So what happens to you? Do you get emotional, right? Because if you get emotional, you don't have a plan, obviously. Do you change your trading style, and do you become a little bit more aggressive? I have met traders that came to me and say, when I encounter a loss, I double my risk to get my money back faster. That is the worst thing that you could do for your trading. Remember, in trading, you have to be very conservative, and you have to use the same risk amount every single day. Do you have your judgment clouded and switch to revenge trading? That's an example of revenge trading, doubling up. You should never do that. Do you respect your plan? Have you respected your plan? Remember, like one slide before, I was talking about the trading plan. That should be in front of you. The timing when you trade, the setup that you trade, the criteria that you trade by, etc. So that sheet should be in front of you. Are you respecting what you wrote down on that sheet? And if not, then go back to the drawing board and see, hey, why didn't I respect that? Okay. All right. The bottom line is that you need to respect your plan, accept the losses for that specific trade or loss, and move ahead. Okay. All right. Now we're going to patience. Now, patience is one of the key qualities you need to have in order to be able to deal with different situations in trading. From the point you decide to enter the trade, where you put the stop, how you manage, obviously how you position size, how you manage the trade, and wait for the targets. You just have to sit and watch for things to happen. Just because the price is moving doesn't mean that you're going to hop in. Never chase a trade, because when you're chasing a trade, you may buy it, for example, when other traders are selling it, and you're going to have an instant stop loss. Needless to say that your risk amount is exponentially high if you're trading technically. So I love this quote. Is by Jesse Livermore, and I respect it and traded. This was one of the first books that I read when I began my institutional trading. It is called Reminiscence of a Stock Operator. And this is what Jesse Livermore said. And this is exactly what I do every single day, and what I have been doing for 25 years, no exception. I'm very disciplined in my trading, and the market is rewarding me really nicely. I just wait until there's money lying in the corner, and all I have to do is go over and pick it up. I do nothing in the meantime. In essence, by not wanting to trade, I have transformed myself into a master of patience by forcing myself to wait until there was a trade that appeared so compelling that I could not stand the thought of not taking it. I had vastly improved my odds. So this is incredible. Okay, this quote is incredible. Confidence. Switch from I can't do it to I can do it. It may seem hard, especially if you're just starting to trade right now, because the market has been very chaotic. And I have to agree, it has not been an easy market. If you have started to trade in 2014 or 2010 or 2017, where everything was a buy, everything was fine and roses. But if you started trading, let's say in 2018, which was a roller coaster year, we had a lot of volatility. It was the first year where the volatility came in after a very long period of time. Actually, after a period of about 5 years, you would have encountered a lot of difficulty. And then 2020, the pandemic, a lot of traders saw a lot of losses. In fact, I do have a lot of friends that are brokers, been working in this industry for a very long time. And they told me, like, a lot of traders blew up their accounts. They totally lost their accounts with the volatility, because they do not know how to handle volatility. Even if you see the technicals, you see the setup, they're having a very hard time position sizing. Position sizing is the number one thing that blows your account. Once you understand how you position size, your trading is going to change forever. Because remember, if you're applying a good risk to reward management, you're going to be very successful. The most important thing is that when you see a trade, you see a good setup, you see a good pullback, make sure that you're not going for 1-to-1 Rs, because that is a disaster. If you're risking, for example, 1 point in the mini S&P to make 1 point, that is a tragedy for your account. You are never going to make it trading. The most important thing, if you see, for example, let's say, for example, you're trading a tick chart, and if you're seeing in a 1 point stop, you have to see if that price action has room to run at least 2 to 3 points for you to make 3 points for each point that is risked. Because if you're using the 1-to-1 risk to reward ratio, you can encounter stops are happening in the market. You're going to have 1 stop, 2 stops, 3 stops, 4 stops. Let's say you have 4 consecutive stops. So you lost 4 points. If you keep on going and moving forward with your 1-to-1 risk, you're risking 1 point and you're making 1 point. Think about it. You're going to need 4 trades to get yourself just out of the hole. My question is, how are you paying your bills? Because if you're going to have 10 days where you have losses, it's obvious that you're going to need another 10 days to make your money back. So at the end of the month, oops, you can't pay your bills. So that's a big problem, where the general concept of any professional trader, any hedge fund, any institutional trader, any algorithm that is trading is to have at least 2 to 3 or more risk to reward units. Now, these reward units have to be represented on the technical chart, because wishful thinking, saying, hey, I'm taking the same trade, but I'm holding on to it, HODLing, right? Holding on to dear life to it because I want it to go 3 points for me. It doesn't work like that. You need to have a tradable void in order to have price action advancement, and you need to know how to recognize a high velocity area in order to have it moving into that direction. Self-confidence is a measure of your belief in yourself and has a number of consequences in trading should you lack it. Essentially, being successful requires that you trust and follow your trading plan. Confident traders rely on their own judgment and not on what others are telling them. So take full responsibility for your trading decisions. Expectations, very important factor, and expectations, when it comes to trading, you need to have really realistic expectations. One of the first problems that many traders face is that of unrealistic expectations. They open accounts for $2,000, for $3,000, and they expect to make a living off of that. It doesn't work like that. If you're serious about trading, save some more money and then come into the market. A real account. You can start small. For example, small meaning $7,000 or more, $7,000 to $10,000. That's a small account. Then you can have some realistic expectations about your returns. If you're coming into the market and saying, hey, you know what? I just want to learn. I'm just putting a little bit of money. Just don't do it. It's not going to work. Paper trade until you get a system down. And then within that time, save enough money to open an account. So what makes traders think that they can start trading one day and be super profitable from that day on is totally unrealistic. And have realistic expectations. It is very important. Set real goals and targets, and most importantly, expectations will be met only by doing your homework. So you need to know exactly. So you have to do your homework. You have to do the work, do the charting, do everything. And of course, when it comes to expectations, a lot of traders, start following someone, or they buy a little piece of education or a signal service or something, and they move to another trading room or a signal service, and they're in permanent search of the Holy Grail. Once trader realize that there is work involved, many search for this Holy Grail. The Holy Grail is often referred to in trading in the trading circles, obviously, as the perfect trading system, the perfect conditions, that perfect indicator that will guarantee success in every trade you enter. The reality is, and the reality of trading is that there's no such trading system in existence. Even algorithms have a really high degree of stop outs, but they do the same thing over and over and over again, and they respect the risk to reward ratio. That is the key for algorithmic trading. It never has this Holy Grail never existed, and it's never going to exist. There is no such thing as that Holy Grail. It's only hard work that the trader must do each and every single day to better themselves. And results will come. Fear is coming from not knowing your risk. Okay, so we talked about risk. We talked about risk to reward ratio. So not knowing your risk, again, it's different when you take a trade with take a trade, for example, with a stop that, for example, a 3-point stop in ES. And it's different if you take, and with one contract, and it's different if you take the same trade, right? It's about $150, right? And if you take the trade with, for example, 10 points. So you can see that if you take, for example, a trade with a 3-point risk, which is $150, and you take it with one contract, your risk is going to be $150. Where what happens if you have a trade where your stop is 10 points, which is $500? So there's that imbalance. And the moment you realize that you have to put in a little bit of thought into this and learn a little bit about position sizing, you're going to realize, and your account is going to start growing. Fear of being wrong. Now, this is very interesting. Fear of being wrong. The fear of being wrong is coming from the fact that you lack confidence. Confidence is education. You are not having the proper confidence that you know sufficient to act on your trading. And also FOMO, everybody knows that this is the fear of missing out. Traders are jumping into trades, but it also means the fear of future regret, right? The fear of future regret. Oh my God, I missed that trade. So you're chasing it. And of course, it's the fear of being criticized. If you don't have a supporting partner, that's going to be really hard for you to devote yourself to trading, because you're going to get like pestered on. It's like, oh, what'd you do today? Did you lose money again today? So again, you have to have a real understanding partner when you're starting to trade. Another important aspect of the trading psychology and having that peace of mind and that Zen moment, that literally stress-free zone. And once you have a really good handle on all of these psychological components, you're going to trade in that Zen moment, in the stress-free moment. I trade in the stress-free moment. I've been trading in this stress-free moment since the beginning of my career, because I understood and I was mentored. I was very fortunate because I started in this career and I'm continuing this career on my own. And I was very fortunate to have extraordinary mentorship throughout the whole process. And I'm getting performance coaching. I'm still developing myself as a professional trader. Journaling is very important because journaling is going to tell you where you went wrong. And it also shows you not to repeat the same mistakes. For example, if you're a stock trader, you're going to, for example, you're going to trade a wide array of trades. You're going to trade gaps, you're going to trade continuation, you're going to trade momentum, you're going to trade different kind of setups. So at the end of the month, or more precisely at the end of the quarter, because every valuation has to go through a full cycle, you have to live through a cycle of earnings. Evaluation after a week is just nonsense. That's one of the reasons why we don't offer every free trials for our trading room, is because there's no evaluation. We have a 1 day just to see what the feeling is. And we offer that for members that are interested in seeing how the room is, but we never offered that because getting into this rhythm and knowing that 1 day represents one trade in an ocean of trades. 1 month represents 20 days in an ocean of trades. So it's not representative. So have your journal ready, because your journal is going to tell you exactly what you need to do in the future. For example, if you have really bad performance for gap trading, just eliminate gaps. If you have really bad performance for counter trend trading, eliminate those. Go for something that is working for you. And besides, you don't need to have a whole plethora of strategies. You need to have 1 or 2 strategies for you to make money. One strategy is actually more than enough. So trading is the hardest thing that you have ever done, because you have to devote a lot of time to education. I study charts every single day. I'm in front of the market every day. I never take 1 day off. So there's no vacation for me. Even when I go on vacation, I travel with my charts. Most of the professional traders that I met, and that is 99.99%, they never take a day off from the market. They have to be in the rhythm of the market. And by the way, trading is not a job, guys. Trading is a lifestyle. We can consider ourselves as retired. I'm literally working less than 2 hours a day, and I'm providing more, and I'm making more money than other individuals make in a whole year, in a month. So sometimes it's frustrating, but once you learn how to do it, it is addicting. It's literally addicting. And the more you learn how to do it, the more you are going to want to stay into the market. And it's really, it's more than addictive. It's a passion. You need to have commitment. So you need to love what you're doing. If you do not absolutely love trading, don't do it. You got to be serious in your approach. You have to treat it as a business. You stop being a professional student, stop being a trading room or a service hopper, stop with the infobesity. So that means that you need to quit everything else. And once you find a system that, hey, you know what? I like this person. It's kind of like in sync with my style of trading and how I want to do. It's like, I want to trade stress-free. Give it a chance and eliminate everything. Because if you're going to get indicators from that person, you're going to get, oh my God, I just found another concept. You're going to be all over the place. So focus on what you have in front of you and try to find your niche, whether it's day trading or swing trading or futures or Forex or whatever it is. And one of the most important questions is, how much time can you allocate to trading? So how much time can you really allocate to trading? Can I allocate 2 hours? I can allocate 1 hour. I can allocate 10 minutes. So depending on how much time you want to commit to trading, then you can determine what trading style suits you the best, whether it's day trading or swing trading or even investing. And don't think that for investing, you're going to need a really huge amount of cash in your account. You could start actually very small. You could start $10,000, just buy one share of something, buy one share of Walmart, buy one share of Target. Where do you go shopping? I go to Target. You go to Target, you go every day. You go to Target, is packed. The parking lot is packed. The store is packed. So it means that that store is doing really well. Just buy one share, buy it and hold it. Same thing with Costco. Every time we go, I'm a huge Costco fan. I go to Costco. I love their products. So I try to focus on some that are not really that much in bulk. But again, go to Costco. The parking lot is full. You barely find carts when you go there. You go in and, there's a crowd of people. It's a zoo. If you're going there in the weekend, it's a zoo. So that means that there's a lot going on there. So you don't have to be. So let's say you don't have that 10 minutes a day. Be an investor, buy one share, buy 10 shares, and just hold for long term. So it means that when you're an investor, you're looking at a wider time horizon. So the other thing is education, and education comes first. Now I'm going to give you guys a really quick example here of a perfect education illustration. So let's say you went to a doctor right now. You had a consultation, you went to your doctor. Let's say, I don't know, you have a headache, you're going to the doctor, and that doctor tells you, you know what, you have a headache. I think you have, you have a brain tumor, you need surgery. Scheduling you for surgery, you're going into surgery. That doctor is getting into surgery, and he's performing surgery. And then after you come out of surgery, if you make it alive, the doctor is saying to himself, you know what, I kind of really like this surgery stuff. I'm going to go to medical school. So you had no idea that individual being the market, right? You had no idea that individual is actually operating on you without having the proper education. Same with the market. You're going into a market which is a highly professional environment because it's driven by algorithms. You're competing against the most brilliant minds, technical minds in the world without the proper education. So it's like performing surgery on someone without having the proper education. And then you go like, okay, I kind of like the surgery. The patient made it. Now I'm going to go to medical school and spend 6 years. So it's kind of like the same thing. Okay. The most important parts of trading are really rarely discussed. Confidence, conviction, patience, mental toughness. You need to have mental toughness, because if you don't have mental toughness, if you have one loss, you go like, oh, boo-hoo, I have one loss. So what? Move on. You have 3 more bullets within that day if you're a day trader. Remember, one trade is just one trade in an ocean of trades throughout your trading career. You need to have discipline and stick to your trading plan and have conviction. And of course, you need the education. You need robust education. You need to know, to be prepared. You need to know exactly what you're doing in the market, because you're trading with or against some of the most brilliant traders in the whole wide world. And of course, preparation. You never come into the trading session without having the most appropriate preparation. You need to do your homework. There's no such thing as, I'm waking up, I'm in my pajamas, I'm coming in front of the computer. No, get up, have your shower, exercise, eat a breakfast or whatever it is. And then when you're coming and in front of the computer, you study, and you study the chart, the events for the day, etc. See what earnings are out. You prepare for the training day. There's no such thing. I prepare every single day. I take about an hour before I open the trading room and I prepare my institutional levels. I prepare everything for the trading day. how it would be if I would come up every day. I would show up in my pajamas and say, hey, good morning, everyone. Welcome to the Trade Out Loud trading rooms. Like, what do we have for trade today? It's like, and I start preparing then. I start the preparation. No, preparation starts way before that. So all these factors represent 90% of the battle, regardless of your trading philosophy. If your head's not right, you won't be successful. So this webinar is for traders who want to trade in sync with the institutional money moves, momentum, and trends, who are ready to eliminate frustration in trading, for those who want to trade with clarity and stress-free, who are ready to become consistent and eliminate the noise, and who are ready to learn a methodology that works on literally any kind of asset. What do traders want? Give me that holy grail. Give me that indicator that is going to tell me and show me exactly what I need to do. Guess what? The only non-lagging indicator is price and price action. And I am using some for 25 years, actually 20 years. I have been using the same indicators that have yield above average gains. And these are very simple indicators. First of all, is price action, because price action is commitment to price, whether continuation or rejection. I use candlesticks, right? Because candlesticks are basically show you the interaction between the buyers and the sellers and show you the psychology behind the candlestick, right? If it's a red bar, it's bearish. If it's a green bar, it's bullish, and it shows you the interaction. If you're having red, then that could be a pullback, that could be partial profit taking, or if it's green, that could be accumulation. I'm using very simple moving averages. Using the 20, 50, 200, and the 10 EMA. I'm using volume, and this is simple volume to show market participation, not volume profile. By the time you match the volume profile and with everything else that you have on your chart, the trade is long gone. Bye-bye now. Okay, and also I'm using the Williams percent R that shows me exactly how to buy the dips into the market. I use it for day trading and for swing trading. I use institutional levels that are calculated on pure price action, and they're determined every single day manually. So this is something that you need to do, because there's not one algorithm in existence that wants to be programmed, or institutional traders do not want to program all the algorithms because they don't want everybody to participate at all of these moves. I pay attention to synchronicity and divergency that represents price action activity based on the underlying sectors and components within the sectors within each futures index, and of course if you're swing trading under each sector, and of course patterns are predictive of future price action. So I'm just going to show you today's example. So we had two moderate bullish above. Like I said, when we see the moderate bullish above, this can be moderate. This could be used with half the risk. We do have a high velocity area here, which high velocity means that the price is going to be projected higher, like out of the ordinary higher. It means it's going to blast higher, and exactly what happened today. So we have, and we're using these very simplistic mechanisms that are derived from, these are not really support resistance levels, but they're derived from multi-price action, multi-time frame price action reaction, and multi-time frame levels. This is also a trade that we called into. This is actually a longer term trade that we have. This trade, you can see that it's respecting really nicely the velocity for higher. And in fact, it's just gorgeous for us. So pure price action allows you to trade with precision. Any instrument can be used on any time frame, provides accuracy and confidence and consistency because it is a rule-based system. Eliminates fear and stress when you trade with clarity, creates focus, and helps with pattern recognition and precise locations. Now, those of you that are familiar with the show Billions, I don't know how many of you guys are familiar. This is an extraordinary show. This is Bobby Axelrod. He's the owner of a big hedge fund. And this is Taylor and imagine Bobby Axelrod, right? Coming to Taylor and say, hey, guess what? I found an indicator online. It's only $8 for the first month. It'll show us how to trade. You're kidding me, right? Okay, so imagine, just imagine and think about how ridiculous it is when you're hearing that thought and saying, hey, I have an indicator indicator, and it's going to show you this and that. Remember, you need to know how to trade perhaps in order to use that technical indicator. So you need to learn how to trade first. If you're just following an indicator, it's going to be a disaster. Guess what's going to do? Artificial indicators will delay your learning process by how long you're using them. You're using them for 3 months, it's going to delay your learning process for 3 months, and then you're going to realize that it's not working, so you're going to get back to square one. Trading is simple, guys. It's all about support resistance, different time frames, multi-time frame alignment. So use what institutions are using, right? Because the institutions are not going to xnx.com website and they're not buying the indicators that are on special offers. Simplifying your trading means decluttering your trading. So how many times have you been in a trade that triggered and definitely stopped out? A lot of times, right? That is because you have not reached that multi-time frame synchronicity. How many times have you found yourself chasing trades because you have no idea how to calculate entries or stops? How many times have you stared at the screen not knowing what to do, yet you pull the trigger anyway because you're bored and you lost money? That's because you're lacking education. How many times do you feel lost not knowing where to enter and where to exit trades? That's because you're lacking a system. How often do you find yourself in a trade in the middle of the news announcement, right? So do you know exactly what you need to do? Trading, like I said, it's simple if you follow the rules. So time to simplify your trading, eliminate the noise, and apply a systematic approach to trading. It's a mathematical approach. We'll determine entries in minutes ahead of the entries. And that's what we do every single day in the trading room. I have coming in the trading room with or in my stock swing trader program with the homework done, and I know exactly where the entry is, where the stop is ahead of time. So ahead of time. So we put our limit orders in and then we just wait. Okay, that's it. Because technical analysis is all about natural price action. Few technical indicators that will point high accuracy entries, stops, targets available for free on every single pattern. All you have to do is look at the chart and learn how to read it. And it's free at no cost. Where if you buy an indicator, first of all, it can be delayed because it may not be based on price action. You get a monthly subscription, right? And you have to pay up front. It's applicable on specific time frames. So it's not going to correlate with your multi-time frame dimensions. So reaching targets is going to be really hard and you're going to be pretty much on your own 100% of the time. They're not going to show you the targets. The only people that are making money off of them are definitely the people that are selling them. So price action will provide accurate read on any charts and instrument. What I'm saying, do the research and start reading about price action, the interaction between the buyers and the sellers. You don't have to buy any course, just read it. You're going to find enough information on the internet. So this price action will override any kind of news event, artificial indicator, earnings, and even dark pools, because you're getting in, you're going to learn price action and you're going to get in at the same time with these institutions. So why technical analysis? Because price action and technical analysis will help you in trading, in finding trading opportunities in any market and any style of trading and any instrument. Any style, day trading, swing, or actively investing. And you only have to learn it once. That's the beauty about it. You don't need to switch to another indicator. Trading is the same. I've had the same trading style for more than 25 years. No sophisticated indicators needed. Learn a system that will allow you to accurately find entries, determine technical stops, calculate targets, trail stress-free, translate candlestick language into profits, and identify patterns with ease. Using simple strategies, using 100% pure price action and technical analysis. Bottom line, knowledge is confidence, and you want to get your confidence to the highest level when trading. Our system win ratio, when day trading, I have a win ratio of 87%, and my stock trading is 89%. And that is because I'm doing the same thing over and over and over again. We have two offers for you guys. First of all, if you guys are interested in trading with me, I run a futures trading room from 9 o'clock into 12 o'clock. I do live stream my charts with key actionable trading levels every single day. These are institutional levels that I design every single day and I apply. I trace them every single day for me, of course, because I trade. And for you guys, I share it with you guys, those of you that are interested in making money consistently. We also have a chat, right? So the room is run on Zoom. So all trades are called on the microphone and typed into the trading room. So there's definitely plenty of time for reaction in the room. The trading room cost is $299. We're still offering a bonus for this week alone, and that's the position size video course that is priced at $1,000. This is going to make or break your account. It's going to teach you how to position size, and we're also will provide you with a position size calculator to make it a no-brainer. So let's say you have a stop of 5 points into the mini S&P. So if you're applying a risk of let's say $100, it's going to tell you whether you're going to take it with full size or micros. So if you want to join, you can, I will show you the website in just 1 second. And we have another offer, $199 a month membership for the stock swing trader. We have been swing trading for profits for more than 11 years, and we have records for that. And our members have been with us for a very long time. We have more than 50% of the members that have been with us for more than 11 years. So that tells you the level of commitment and the caliber of the trades that we are actually taking. If you guys want to sign up for the futures trading room, you can hop onto our website. It is TradeOutLoud.com, and all you have to do is go under services. Here's the futures trading room. These are more details about the trading room. And at the very bottom, you're going to find view futures trading performance. And we started the trading room in 2017. So you pretty much have right now 4 years of trading performance in there. You can see our results. And if you're interested in the stock swing trader, where we have so many traders, lots of traders, we have over 300 members in the day trading room, and we're keep on adding because they love it. They're making money.
Hey, Anka.
Oops, yeah.
Yeah, sorry to cut you off, but it's then top of the hour now.
Okay, so thanks so much, everyone. If you're interested, hop to TradeOutLoud.com.